Hi everyone, welcome to the Long Beach Real Estate Market Update for March 2025, where we make sense of the market data so you can make an educated decision when it comes to buying or selling a home. The median sales price in Long Beach for March was $842,000, up 11% from the median sales price in February, and up 15% versus the median sales price in March of last year. 47% of the homes sold in the last 30-day period sold for less than their listing price, while only 38% sold above. Inventory of month supply is at 3 months, up 7% from 2.8 month supply in February, and up 30% from 2.3 month supply last March. The median number of days on market was 14 days in March, which is down 48% from 27 days on market in February. But this is up 17% from last March's 14 days on market. New listings are up 1% to 245, and active listings are up 7% to 555. Both new and active listings are up 3% and 36% respectively. Closed sales took a 3% step up to 164 in March, but this is down about 8% versus last March's 179. Interest rates continue to hover between 6.23% and 6.9%, depending on your personal financial profile and the particular loan product you choose. Recession talk has been all over the news lately, and with all the global economic upheaval, many pundits believe that the odds of recession continue to rise. And that leaves people wondering what could happen to the housing market if we do fall into a recession. Let's take a look at some historical data to see what's happened to housing during the recessions going back to 1980. Many people believe that if a recession hits, it's likely to cause housing prices to fall like they did in 2008. But that was an exception, not the rule. 2008 was the only time that we saw such a steep drop in home prices. In fact, according to this graph from CoreLogic, in 4 of the last 6 recessions, home prices actually went up. So, if you're thinking about buying or selling a home, don't assume home prices will crash. The data simply doesn't support that idea. Instead, home prices typically follow the trajectory they're already on. And right now, nationally, home prices continue to rise, just at a more moderate pace, typically around 3 and upwards of 4%. While home prices tend to stay on their current path, mortgage rates usually drop during economic slowdowns. Again, looking at data from the last 6 recessions, mortgage rates fell each time. So, based on the data, mortgage rates could decline. While that would help affordability, please don't expect a return to the low rates of around 3%. Bottom line, the answer to the recession question is still unknown, but the odds continue to increase. But that doesn't mean you have to be fearful about its impact on what's going to happen to the housing market. The historical data can give us an indication of what's likely to occur. If you have any questions about anything we've talked about today, or would like some data on an area outside of Long Beach, please reach out to me. I'd be more than happy to help. I'm Brandon Pettis. See you next month.